Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Monday. Thank you for a nice weekend. Actually, it was very nice here in Dallas. Well, I love the fall weather when it comes because it's so nice here. Basically, what happened today, we had a pullback in the market. Not surprising because we had, yeah, pretty much we were up last 3 days. So definitely had a pullback in the market. I definitely trimmed a little bit of my positions. I sold Lilly, probably a mistake because it went up, but we're only 2 days in front of earnings. So what I like to do is follow the Can Slim trading rules, and that says if you're not up more than 10% coming into earnings, it's probably best to take profits, wait to see what happens, and then if it's a good result, buy on the other side of the earnings. Holding through earnings sometimes can be difficult, and can do that. Now, of course, I broke the rule regarding earnings and Exxon. I did start buying right before earnings, but I kind of had a look see that earnings were going to be pretty good, and that's indeed what happened. They were up. Exxon was up again today. I don't expect that to hold. Here's the situation with today. AMD, Intel, and onsemi all kind of declined on earnings. So this is uh, this is kind of a precursor of, I think, that we might not be in a we might not be in a confirmed uptrend for much longer. I definitely think that with the interest rate rise, we're likely to see some more. Um, we may see some more damage in terms of that going forward. So who knows? But just let's get into the slides here. The stock of the day, and let me click on over for everybody on um, TikTok here. Stock of the day is a company called PWR. That's the symbol on it, anyways, and it is it is an oil and gas driller. Not terrifically exciting, but very nicely set up. It's got a 149.43 entry point, and so there is a buy point at 144.41. Currently 141.60. Let's take a look at it on the big chart here. PWR, of course, is the symbol for this one, and let's see how it's doing. I'm gonna pull this over here a little bit. Yeah, come on. It's not. It's kind of giving me some weirdness here on the on the display. Let's move that over. There we go. Okay, so here we are with. Oh, that's telling me it's rocket markets. No, I don't want to see that. PWR is what I'm looking at, and that's, of course, an oil and gas driller. There we go. And as you can see, it's starting to set up very nicely. It's pulled back, and this one might be actionable tomorrow. It's a 93 relative strength, which means it's in the top 7% of all stocks there. Again, this is the buy point that I was talking to you about. We made some nice progress today. Here's the thing. Here's how I would handle this one. If you want to do an early entry, what I'm doing here is I'm drawing a reversal line. And what this is that if it moves above this line, that's where you might want to consider buying it. I'm going to set an alert on it here, but I'm going to put a reversal line is reached. And what that means, of course, is that as we know in kind of can slim trading, which is what I do here. What happens is we want to see an upward trend on increasing on fairly good volume. Now, if we look at the volume signature here for this, we're going to see that there is declining. There's declining upward trending volume, which means that people are holding onto their shares. And so, if it moves above this buy point, that's where we could possibly get in. Let's take a look at the checklist just to take a look. It's got a 100% checklist. That's kind of what we want to see. We want to, especially in this market that is so volatile, we want to try to be buying the best that we can, best merchandise that we can get. And currently, that is definitely the case here with this issue. It's passing on everything. It's being acquired by some of the large funds. We've got We've got a number of funds in it. Let's take a look at the funds. Okay, there we go. 16 or 19 funds. So 1,619 funds are in this one. In a company that you probably never heard of. It's called Quanta Services. Symbol is PWR, and just something that you might want to put in your back pocket here because that may give us an opportunity. It may give us an opportunity here coming up. So definitely something to look at there. All right. So if we go to the next slide, let's see what we got here. I want to show you this, and this is also very interesting to me because in addition to investing in stocks, my brother and I, we have a little real estate company. It's really tiny, but we invest in single family homes, and this has become sort of an interesting way to go. Now, we're primarily investing in the Houston area, even though I live up here in beautiful Dallas, Texas. We're investing primarily in the Houston area. We moved some of our we were in California. We've sold out of there, and we're moving into the Houston area. But I wanted to show you this. This is very interesting to me. Basically, institutional investors now are starting to move into this market. They own about 1.5% of all the existing 23 million single family homes, believe it or not, in the United States. And this has been a trend really since 2013, is that you're seeing a lot of them come in. Now, some of the big ones in this are Tricon Residential. They own about 29,000 single family units. And also Invitation Homes. That's actually based here in Dallas. That's they got about 11,800 or so homes, and they also in about 16 markets. So this is definitely as prices go higher, it's becoming more and more difficult for first-time home buyers, even with very, very good salaries, unfortunately, to make the down payment. So you're starting to see a lot more renters, even in the high end of the market. So that's kind of what's going on here. Very interesting in terms of in terms of that. We're seeing a lot of action there. Also wanted to show you the single family home rent index, and this unfortunately is in a kind of very inflationary thing. But what's happening, of course, is that we're starting to see increases of 15% year over year in the single family home market. So it is becoming an investable market, whereas in the past, this market really wasn't investable just because of people just didn't want it. The prices have gotten to the point now where it makes sense to do single family homes, whereas before the rents weren't high enough to support it. But that's changing, and the landscape of rentals is changing in general. So something that you might want to think about. Again, there's several good companies in this: in Invitation Homes, Tricon Commercial. And again, those aren't at buy points right now, but that's kind of what's going in the market for rentals. I do see this as an area. People are going to pay for single family home rentals. I mean, that's just going to happen, even with even with everything that's going on. So this is sort of in essentially a not a great bullish area. This is an area of the market which I think we can possibly possibly look for future leaders. All right, well, let's take a question from TikTok. Thank you very much. All right, we got a lot of likes there. Okay, enjoying. Thank you very much. Let's see. Okay, so let's go to Fernando. Thank you very much, Fernando. Appreciate it. And Fernando is basically, hi Jim. Can you can you check out Nike for us? I think it might continue downwards. Actually, I think you're right. I think you're right, Fernando. I think that we could see even lower, believe it or not, even lower on Nike. So let me pull over to that and NKE. There we go. Let's look at Nike, and I'm going to pull that up on the screen for everybody on TikTok. There we go. Okay, whoop, there we go. So now you can hopefully see the chart that we have for the chart that we have for Nike here, basically. And what's going on is we have this downward trend on Nike, and it's fairly significant. I mean, it's we've been Oops, let me get that. There. What I want to do here is I want to kind of show the last little part of it so we can see. Nike is basically trading a little bit up after hours, $93, but it's in a downward trend. And here's the thing about Nike and most of the consumer products area. I think that this may be setting up as a good short. I haven't shorted it yet, but here's why I'm thinking that may be the case. It seems like what's happening is it's in a long-term downward trend, and if we go to the weekly chart here, let's take a look there. You can see this very, very clearly. Yeah, you can see that we're in this downward trend on. By the way, when you're scouting for potential short ideas, good idea to start with the weekly chart, not the daily chart. And as you can see, since basically September, November of 2021, that's where it hit its high. What happened is it came up to the buy point here. It failed to break above that, and then it's been in a downward trend ever since. Now, here's why I think that this one actually might be interesting uh, a- as a um, as a potential short. We came through earnings; they were bad. We have been rallying up to the 50-day line, and it seems like we're getting some resistance there. So let's take a look at the daily chart to see if Nike could be a potential short. Now, I do like when shorting, I do like to short the bigger, more liquid stocks, and that definitely is the case here with Nike. They're the biggest sports apparel company in the world. So that's definitely something to look at. We looking like we got some resistance right here. We had a down day today. It was up after hours, but it is starting to look like, we might get a very strong downward trend on this. I'm not ready to short this one yet, but it's got a checklist of 44. The technicals, it has basically at the 21-day line. If it fails at the 21-day line, that's where it might become starting to set up as a good short. But again, I put this on the short list. I would not short this one here. Just a little bit too dangerous right now. But if they don't if their earnings are not good coming into um, December, it could be a disaster. But I think it will be very tough for retailers this year. Just my take on the market. So I would be, I would not buy Nike long. I would consider possibly doing a short on Nike. All right, let's take a look. What are your thoughts about cloud storage and cybersecurity companies? You know, it's sort of, I think that, they are, here's the problem with that right now is that the trend in the market this year, and I think it's going to come next year, is that physical things are where you want to be. You want to be in the physical world, not so much in the software world in anymore. Now, it's true. We've had a nice build out in cloud, but the problem is it's getting a lot more competitive. I would stay out of cloud right now. They're just the it is not performing well. This area of the market is not performing well. I want to point your attention to Microsoft. Microsoft had a terrible report. Of course, their premier product is Azure now, believe it or not. And so let's take a look at that just to kind of see if I'm all wet here. But I just think cloud storage right now is you don't want to be in this area of the market. You want to be in the more commodity related companies such as oil and gas. I know it's boring, but that's really been the story. The story has been a movement away from tech into other things. This is the chart for Microsoft. Let's go to the weekly chart here. This is one of my favorite companies, by the way. I'm not trying to bag on Microsoft, but as you can see, basically since September 21 or basically November, that's where it made its high. It's right is right there, and then ever since it's just been in this downward trend, and I don't see any change in that. Relative strength is 31. That means that most of the market is better than this right now. We basically have 69% of the market that's doing better than Microsoft. So not a good situation. This is, of course, is a cloud king. One of the other ones, of course, is Amazon. They have a little bit of a more of a cushion, Amazon has a little bit more of a cushion, of course, because AWS is not the only thing they have. They also have retail. But let's check to see kind of and see if my thesis is totally all wet or not. What I'm doing here is I'm going to show you what I kind of expect. I'm gonna compare Microsoft and AWS. That's sort of the you know that that's sort of the that's sort of what I'm looking at. So here is the comparison between AWS um, and Microsoft. So go back here to that. Trying to get that right one up here. There we go. All right. So here is Microsoft. Let's put AWS in there. That's AMZN. Of course, they're the parent. Amazon is the parent. Kind of similar. And Microsoft's actually doing a little bit better than Amazon over the last year. But let's go with the last, a year is an eternity in the stock market. So let's go with so since July. And as you can see, if you were to have put in $1 in July into either of these stocks, you would have been down on Microsoft. On Amazon, not so bad. You've been down 5 cents, but on Microsoft, you would have been down 10 cents. So I do not like this trend at all. I don't think it's good. If we compare that to the oils, let's look at XOM, which is ExxonMobil. You can see that if the same time since July, if you put $1 in Exxon, Amazon, and Microsoft, if you with Exxon, you would have been almost 27 cents richer. It was up about 27%. Again, you don't want to be buying in the downward trend, and that's kind of sort of what's happening, unfortunately, with some of the cloud kings like Amazon and Microsoft. They've been sort of moving to a lower. They've been moving down, not up. So that's why I think you got to be careful when you're looking at the cloud kings. And I think it's not a good time right now to be to I don't think it's a good time to be in the cloud stocks right now. Oops, yeah, that's kind of weird. See if I can get back to my right screen here. Oops. Um, and really what's going on there? Oh, okay, come on. Come on. Well, heck. Let's see if I can get to the right get to the right well, there we go. All right. All right. So that's sort of my take on some of the some of the cloud companies. I just think that, every dog has its day in the market. And right now with the cloud companies, I just think you gotta say, well, let's wait until we have a better let's just wait a little bit here until they're better. I know that we would love to, we'd all love to be investing in them, but I just don't think they're right now. So my take on it is that you want to avoid the cloud companies and also the cybersecurity companies. I think they're overdone. I think where the action is going to be in the companies that make things, such as the oil and gas companies. That's going to probably be where it's going to be more significant. All right, go video. BP is earning tomorrow. Is it viable? Here's the thing. I do think that you're onto something here, Go, and that is I definitely think that we can possibly look at buying BP, but I would wait. I would wait until after earnings because this is the thing, and this is such a tricky market. This is such a tricky market to play in because we kind of have to confirm that it's going to be good. So what I would do is I would wait to see kind of what the reaction of the market is going to be with BP. Let's take a look at BP here. Um, we're right in the buy zone, so this is something that I definitely think we could move into. I sold my exposure in Lilly, which is a pharmaceutical company, today, and I'm looking at possibly replacing it with another oil company such as BP. I think this is incredibly well set up, and it is one of the majors. Not quite as good a checklist as Chevron or ExxonMobil, but very, very good nevertheless. I think this is a strong company, and I think you're going to have great earnings. That would be my guess. And so I definitely think this is probably I don't know if this is going to gap up or not. Who knows? But in situations like this, the big oil companies tend to dominate. So it's up after hours, 33.37. It's definitely actionable. There's a very nice buy point on this one that I think we can look on. So if we look at the pattern recognition, we're 1% above the pivot with a cup with handle. This is the best pattern on a stage one cup with handle. So this is a very, very good pattern. I definitely think we're going higher on BP. So you definitely have your point go that this is a good one to buy, but wait until the earnings because we might, it might pull back. But I definitely think this one's probably going to go up. It's very, very well positioned. So I definitely think, I definitely think that this is a viable one. But don't put all your chips all in. Maybe buy half a position and then see how the earnings come out. I think you're going to be very good for BP. I really do. Your thoughts on PBR? I have it stopped at 1180. This is one of the this was an interesting. There's so many risks when it comes to oil companies. Unfortunately, PBR is not Pabst Blue Ribbon. It's Petrobras, and there was just an election, of course, in um, Brazil, and Lula, who was the leftist candidate, won the election. And of course, one of the things that Lula wants to do is use the capital. And this is true. Many leftist leaders like to do this. Take the national oil company and use it as a piggy bank. So this is an issue. This is really what caused it. It's not the oil market that caused, in my opinion, PBR to pull back. I think it's Lula, the election of Lula, and the uncertainty as that this might be used as a kind of a national piggy bank here. So we just don't know what's going to happen, but very, very likely that it's not going to be performing quite as well. This was an absolute dividend king. I mean, I had this one. I got a few dividends off this one. Just phenomenal dividends. Now your stop is at 1180. So that's not a bad stop. I that's right at the 50-day moving average. So I think that would work well, Bombadoc. I think that would work well there. But do expect a little bit more pain on this one. I think that this stock is gonna be punished. Not the oil sector, but I think that this one might be punished a little bit. All right, we're almost done here. Well, 22 minutes. Okay, let's take a look at some of the questions from TikTok. All right. All right. All right. All right. Just join. Just join. Great. All right. So let's kind of go over some shares that I think that might be of interest, and unfortunately, most of these are going to be in the are going to be in the oils. But BP, I think, is particularly looking particularly good. I agree with Go Video here. I agree with you. I think that this is a good stock to possibly start to move into. It's not quite as strong as some of the other oil majors, but it's still pretty good. 91 relative strength with strong ownership. And this is the interesting thing here. This is the largest volume since the beginning of the pattern. So this is showing a lot of institutional interest in this stock in the weekly chart. Let's go to the daily chart to see. So this one might be offered opportunity. I definitely think this is going to be offering an opportunity here. It did move. It seems to be holding the pivot. The pivot is 32.98 with fairly strong volume coming in. This red line, of course, is the average. So anything over this is very, very strong. So that's kind of what I'm looking at here as well. All right. Well, we're almost out of time here. Oh, we have some more. Twitter. GoVideo is asking about Twitter. Well, of course, now Twitter doesn't exist as a company probably in a few days because it did go private. And so, what I suspect is that Elon Musk is going to buy, Yeah, okay, so it's not recognized. So it's definitely it's off the market. Yeah, it's no longer. So Twitter basically doesn't exist as a company. Now, I do think that Twitter is very likely to come back it's very likely to come back in about 2 years, but at least for right now, Twitter's a private company, so you can't buy it. So hopefully, if you were in there, you'll be making some dough off of it. I think that the amount paid was just way much, but whatever. Sarah is asking about IBB. Let's look at IBB to see what the deal is. What the deal is with IBB. All right. So going over here to charts, and there we go. Opening those charts. IBB. Oh, there we go. Let's now. Hopefully, in a second, we will be getting the charts. Okay. There we go. Biotech ETF. Um, Here's the thing about this ETF. We're still in a downward trend. I can't recommend it, unfortunately, being that we're in a downward trend. So I would think you just can't really do anything with the IBB right now. Let's look at CPRX. If we're going to be in the if we're going to be in the biotechs, I think you got to go with bigger companies. Uh, it's just I still think that healthcare is good, but it's just not. I don't think it's ready to buy right now. I think we've got to kind of go and look for the setups again. Catalyst Pharma, another good one, but again, I would not be a buyer here of Catalyst Pharma. If you're looking for something in the healthcare space that has a likelihood of doing better, I think what you got to look at is something like McKesson MCK. I know it's expensive, but it's it's much better set up than some of these biotechs. It's currently in a buy zone. I definitely think it's in the top 3%. Its relative strength is 97 here. We did have a little bit of a sell off today. This got earnings basically tomorrow on McKesson. I think the McKesson earnings are going to be very very good. And so this is what I think if you're interested in healthcare, you got to go to where the money is, and that's going to be United Healthcare and companies like McKesson. I typically like McKesson a little bit better than United Healthcare, but I think they're both very good. I think you ought to stay away from the biotechs because they're extremely volatile, and we're not truly in an upward trend in the market. So that's kind of my take on it. All right, everybody, thank you so very much for taking a look today at the show. I'll be back tomorrow, of course, at 5 o'clock. And if you are not already liking the show, please do. It really helps us. So hit that like button. Really, really appreciate that, of course. And also, if you're not on the Dallas Trading Floor email list, that's easy to do. Just go to www.dallas Trading Floor. I think we have one more question. Oh, Charles Schwab. Yeah, this is an area that is starting to look good. I do agree with that. Let's see if I can get Charles Schwab up here. Uh, SWAB, I think it is. SWAB. Charles Schwab. Oh, yes. I have to remember. I don't remember what the symbol is offhand. Hold on a second. There we go. Of course, I use Charles. There we go. And it was down a little bit today. And SCHW. That's right. SCHW. So let's take a look at that one real quick, and then I'll read the last one today. SCHW. There we go. Charles Schwab coming out of this beautiful cup pattern, not a cup with handle, but a cup pattern. Very nice. Did pull back a little bit. It seems like there's a little bit of resistance at 80. 88 relative strength, so quite good, but still the oils are better. I think you want to look at the oils. This is looking very, very good, and this is in a sector of the market that is getting some love right now. So it's not really buyable at this point. I think I would wait for some more strength, but I think that definitely you should put this on your watch list because it's looking pretty good. And but I think you should put this on your watch list. I think it's a little bit too early, but keep it on your watch list. Okay. Well, again, BP earnings are tomorrow. That's set up very, very nicely. Also, you want to take a look possibly at McKesson. They have earnings tomorrow as well. I think both of these are going to be strong. So even in even if we have a weaker market, I think that these two will come out of that correctly. They're probably going to be viable, but wait for the earnings and see what happens there. All right. Uh, I will see you tomorrow. Thank you so much, everybody. Please tell your friends as we need more people to watch the show. But until tomorrow at 5, happy trading.